Hello, I'm Chris Sarley, investment research analyst at Fund Caliber, and today I'm delighted to be joined by Rebecca Jiang, co-manager of the elite-rated JPMorgan China Growth and Income Trust. Thanks for joining us today, Rebecca.
Thank you, Chris.
Let's start, obviously, with the challenges in China. It's been a difficult 2021. The markets have been down sort of 30% or so over 1 year, but looking at the portfolio, it still looks fairly aggressive. You have 37% in China A shares, half portfolio in Hong Kong listed Chinese companies, and gearing is still reasonably high. The trust has also bounced back very well in the past month or so. Could you maybe give us a snapshot? Has China finally turned the corner, and are you more positive on the market from here on in?
Sure, Chris. Thanks for the question. If I could just take a step back and think about China from more of a global perspective, China has really decoupled from the rest of the world ever since the outbreak of COVID. So if we look back at 2021, while most of the major economies were still increasing stimulus because of COVID, China was actually withdrawing stimulus during that period of time. And on top of that, they had targeted tightening on a couple of important industries, namely property and internet. Now, fast forwarding to this year, 2022, we know that most of the major economies globally are, fighting with inflation, and central banks are basically tapering and hiking rates. And we're seeing China being on the opposite side again. PBOC, the Central Bank of China, is loosening monetary policies. The government is also stepping up fiscal stimulus. And of course, we've seen, the government concluded most of the regulatory actions on property and internet. So this makes China market particularly interesting in the current global environment because of the counter-cyclicality of both the economic and policy conditions. And of course, this comes from a 30% drawdown that we've seen 3 months ago, which has made valuation extremely compelling. And after the recent bounce, as you noticed, the market is still down 30% from a year ago. But the long-term story of China that we believe in, that comes from high GDP growth as well as abundant bottom-up opportunities remain unchanged, particularly the China A share, which is the onshore market of Chinese equities. They still offer a vast opportunity set of interesting individual companies.
Okay. And in terms of the market sort of turning in the past sort of couple of months, has the portfolio sort of turned in tune with that? I mean, you can invest in so much, the likes of Greater China, Taiwan, which is perhaps generally more defensive. Have you been selling those and moving into more aggressive parts? Or, just give us a snapshot of the portfolio as we speak at the moment. And are you as positive on China as perhaps, or more positive perhaps than some of your peers? Just give us a bit of an insight into your outlook at the moment.
Sure. We have been, long-term China believers. We have been positive on the Chinese equities from a long-term perspective. And I would say we have probably stayed close to maximum gearing over the last 3 quarters or so. Mm-hmm. And the few Taiwan-listed companies that the trust owns, there are mostly Chinese companies either listed in Taiwan or have majority of the business coming from China. But on the margin, we have been tweaking the portfolios towards 2 areas. One is sectors that have been negatively impacted by regulatory actions last year, which is namely internet and property and property-related businesses. The other area that we have been adding bets towards are China stimulus-sensitive names, mostly in renewable energies and smart infrastructure.
And just to quickly follow up on that, on the first point with regards to the areas that have been affected by the likes of property and internet, do you just feel they've been overly sold off, or has the news sort of been perhaps there's been an overreaction to the news really?
I think first of all, we've definitely seen a settling down of regulatory framework around the sector, and arguably the sectors have been growing under a relatively loose regulatory environment over the last decade, and China. Throughout the last 1 or 2 years, have been quickly catching up with the Western market when it comes to regulations around these sectors. Things like protection of consumer data, privacy, as well as regulating on monopolistic behavior, corporate behavior. Now, at this point of time, we felt that most of that regulatory framework has already been set up. So a lot of the uncertainties around future regulation is now more or less being removed. Also, because of the regulation, we've actually noticed that a lot of the smaller players and irrational competition have now been cleared out of the markets, which has resulted in significant improvement in profitability in some of the businesses that the trust invested into, simply because the competitive landscape have improved a lot. And this comes on top of the valuation point that I talked about. So I think generally speaking, we are quite positive on the sector as a whole. But of course, as bottom-up stock selectors, we have different assessments on different companies, so we not treat them as a one homogeneous sector. But certainly, there are a lot of interesting opportunities within the sector.
The trust also pays a dividend. Could you maybe talk us through the process behind that and the level of income it looks to achieve?
Sure. The board of the trust firmly believes and wanted to deliver stable income to the trust investors. So the board aims to pay out 1% dividend based on 1% of the NAV on a quarterly basis. So this, on the other hand, doesn't impact the way that we manage the fund. So the natural yield of the portfolio at the moment is somewhat below 1%. So this remains to be a very growthy portfolio. Anything above the natural yield will be paid off by out of capital gains.
Okay, and just finally, let's obviously, in terms of the China recovery that we've seen recently, could you maybe talk us through the potential risks and the future potential? Do we always have to be prepared for the government's potential to interfere, and are geopolitical concerns still sort of rife in the region?
Yes, I think the biggest risk on my mind on a short-term basis is actually related to COVID, or more precisely, China's COVID policies. We know that China has been sticking with COVID zero for 2.5 years now. While we have seen some relaxation more recently on COVID control measures, for example, I'm actually currently in Beijing on my second last day of home quarantine. Beijing actually has cut down the number of quarantine days from 21 to 10 days at the moment. That happens within the last month or so. So we definitely have seen some fine-tunings of the extreme stringent COVID control policies. However, China hasn't really revealed a comprehensive COVID exit policy yet at the moment. So, I think we are expecting that zero COVID to be around at least for a while. I think this is probably the biggest uncertainty for investments in China. We know that we're dealing with, or the Chinese government is dealing with a highly contagious and fastly mutating virus, which impacts vulnerable population much more seriously. So it's a tricky problem that they're dealing with. At the moment, we felt that they have made certain tweaks, and they're prioritizing economic stability and growth, which is positive to the equity markets. But this is, from my perspective, one of the biggest risks that investors should bear in mind. I actually think the two risks that you mentioned, government interference and geopolitics, those are tricky questions or tricky problems, but also there is something here to stay, and there are always two sides to every story. I talked about how a lot of the internet companies that the trust invested into are actually seeing margin improvements because of regulation forcing out a lot of the irrational competitions. Similarly, when you think about geopolitics, we've actually seen geopolitics driving import substitution and increasing self-sufficiency in a lot of the areas, particularly technology related. And that has benefited a lot of the local Chinese companies. So really, those are tricky questions that we need to think about. But we actually see both opportunities and challenges arising from those aspects.
Thank you very much for joining us today, Rebecca.
Welcome.
And if you'd like to learn more about the JPMorgan China Growth and Income Trust, please visit fundcalibre.com.